Good morning, everybody, and thanks, Victor, and thanks, Fiona, and the Microcap team for putting on another event this year. So I'd like to give everybody an update on Leaf Resources, our progress over the last year or so, and also introduce myself as the CEO. I joined back in February and have been working with Doug Rathbone, our chairman, and the board to build a global leading growth business in Leaf Resources. So to refresh everybody about what Leaf is, essentially we've positioned the business as a technology development in the ever-evolving green chemistry market. So essentially our technology looks to convert plant biomass into its fractionated composition chemicals and then take those forward as valuable intermediates into the chemical processing industries. The opportunity here is essentially focused on identifying and adding into the chemistry market's low carbon or low intensity carbon inputs as opposed to high intensity carbon inputs. So what does that mean? Essentially looking to replace petrochemical inputs, which are derived from oil, to renewable carbon inputs, which are derived from biomass, as one of the opportunities to change the way that we utilise carbon in the planet. So essentially our process is a biorefinery. So we take biomass and we efficiently convert that biomass by deconstructing it and further fractionating that into its resultant intermediates, which happen to be carbohydrates and a product called lingin. Through our process, we also use glycerol, which is part of the proprietary chemistry. And that glycerol, we have two choices within our process. So we can actually take that glycerol and recycle it as a recycled chemical input, or actually take it forward as a refined product that can add a fourth product into the intermediates that can go forward into different chemical industries. Again, it's the focus on low carbon intensity products that we aim to address. So really, by introducing biomass-derived carbon intermediates, we can start to address some of the challenges that we are seeing regularly on a daily basis with respect to our utilisation of carbon that we've been using for the last 100 years. So if I was standing here 100 years ago, I'd probably be talking to you about refining oil. But today I'm standing here talking to you about refining biomass as a renewable carbon as opposed to a non-renewable carbon source. So we're really now focused and been bringing our focus strongly to our first project, which we identified in Malaysia, and we've made good progress this year. So I'll talk more about that in the next few slides. So just to go back a little bit more about the process that we have. So we've got some distinct advantages compared to existing pre-treatment biorefineries that convert biomass into carbohydrates. We do find with the chemistry, proprietary chemistry that we've patented and developed, that we get better yields in terms of conversion, which is important in terms of liberating the carbon within the biomass. That's dependent on the feedstocks. One of the great advantages is that it does work with a broad range of feedstocks. So we've worked with both agricultural residues such as sugarcane bagasse, wheat straws, through to woody biomass inputs such as hardwood, eucalypt, poplar, and so forth. So we're able to apply a number of different biomass inputs into the process, which opens up the opportunity as to where we can actually site and place a biorefinery within the agricultural systems around the world. As I mentioned, the Glycell process uses glycerol in combination with dilute acid to provide the deconstruction chemistry for essentially pulling apart the biomass, if you like. That has given us an additional opportunity in that we can work in a scheme where we're recycling glycerol, or we can actually take that glycerol forward in a refined product, and that has its own defined market. that can assist the economics depending on where the biorefinery is situated. For example, in Malaysia, there's substantial amounts of biodiesel-derived glycerol that can be further upgraded and head into the different glycerol markets, which are growing to be, as no real surprise, dominant in China. The process, as we've looked at it, so clearly there's the chemistry of it, but in terms of the actually industrialising the process, we've sought over the development of it to ensure that we can use and not reinvent the wheel with respect to specific equipment in the different unit operations. So across the actual engineered process, we use processes that have been established for, in some cases, more than 50 odd years that have been employed in specific processing situations such as pulp and paper and chemical processing. So that enables a de-risked position with respect to our engineering. We're not reinventing any specific processes. We're simply using available processes and using those in a specific sequence. So why do this is always a good question. There is a large and growing market for renewable products that is being driven from a number of different aspects across the supply chain or value chain. Principally, the consumer goods companies certainly have their marketing and sustainability policies that are well established, but coming back up the chain, different chemical processing companies are certainly bringing on very clear mandates in their policies as corporate policies, or in fact being made to follow other more broader government policies with respect to at least blending, if not replacing, different products with renewable low carbon containing products. So the pursuit of decomposable and biodegradable plastics is continuing. One of the great or good examples that we certainly cite is that of polylactic acid. Polylactic acid is the only chemical that leads to a biodegradable plastic, and there is no replacement, or there is no substitute with respect to petrochemical production for it. So it's truly a renewable bioplastic. It's made from lactic acid, and that lactic acid is made from sugars that we produce within our process. So there is a clear and growing driver within the chemicals markets, and the chemicals markets both are for fine chemistry, intermediates, but also looking at specialty fuels, which essentially are chemicals, but at a very different scale with respect to specialty chemicals. So there's many examples that we believe are valid, and certainly within the different regions we're looking at for our projects. Just to expand where we actually head to with respect to the value chains or supply chains. Sorry, let me go back. Our refinery takes biomass, breaks it into our intermediate products, and these can go into making a range of different intermediate products through to existing and new materials as well as fuels. So it's a broad range of applications that our Glycell biorefinery intermediate products lead into, which is an exciting proposition for growth. As I mentioned at the beginning, this is all driven around finding low-intensity carbon inputs. As we see this industry growing and continuing to grow against both government and industry applied policies and mandates, we see that there is a profitable revenue model that can exist as we take forward our biorefinery platform. We see it as a low-cost business model. We own our entire platform and intellectual property, and that can be applied in a number of different geographical regions, leading to multiple licensing opportunities and multiple site opportunities for biorefineries. Our primary focus is now Malaysia, so let's talk a little bit about our focus on our first first biorefinery. Oh, sorry, before I do that, the business model would include different licensing revenue streams, and specifically we look to focus on an upfront fee followed by royalties, and the distinction between the two, we would see that the long-tail royalties would generate a substantial amount of revenue over time. With respect to the Malaysian Biorefinery, that was established under a joint venture, and the economics with respect to it will follow the joint venture's program. So I'm out of sequence here, I do apologise. I did mention our intellectual property portfolio. Leaf owns its intellectual property exclusively. We've filed in the most logical countries with respect to siting a biorefinery, which includes a number of the equatorial region countries, including Malaysia. We also have patents pending in Europe and the US. We have looked to expand that portfolio by adding additional support intellectual property around the outside, and it's also underpinned with a substantial body of proprietary confidential information and know-how underneath the engineering. So it's a well-established portfolio, and we continue to look for other opportunities as to how to bring additional value into that portfolio as we deploy different licenses to the biorefineries. So to the Malaysian Biorefinery, which we've focused on substantially, we've looked and reaffirmed a number of the positions that we've had with respect to the biorefinery. We have a site that's been selected. We have an option to purchase that site, which is located down in the top part of Johor, in a site near a town called Segamar. It's co-located on an industrial park that has a processing plant that takes in nearly 500,000 tonnes of empty fruit bunch per year and processes that through to a specific fibre product. We have an in-principle agreement with respect to fibre supply from that particular producer, which actually allows us to decrease some of the capital costs in terms of fibre supply. It also shores up the logistics of fibre supply within that region. Importantly, Segamart sits within a 100-kilometre radius, of which there is around about 3 million tonnes per annum of available empty fruit bunch biomass. So supply of biomass is secured, and we have a processor that is already handling a substantial amount. So that certainly helps de-risk the component of logistics and biomass input. We've signed MOU with Petronas as one of the potential offtake partners for taking sugars from the biorefinery. We continue to talk to other potential offtakes within the region, and at some stage next year, we will have progressed our discussions with respect to all those different groups. Importantly, we've had strong and continued support from the Malaysian government, and that has come in a number of different forms. The most recent position that we have with respect to Malaysia has been progressing a funding application with the Technology Depository Agency, which is an agency under the Ministry of Finance, to supply funding. With respect to that application, we've had to provide a number of key elements of information to them. The technical validation that we've produced so far has gone and basically been provided part of the application. We've done a substantial amount of work specifically on Malaysian empty fruit bunch, namely the large study that we conducted at the beginning of this year in Holland, and continued also local activities with different engineering groups. We've applied all that within the application package, and essentially some of the validation points that we've added to in that package. We have an independent engineer report that was conducted about 24 months ago. We've had confirmation from our enzyme supplier that the input biomass works very well. We've now got a substantial amount of operating data at up to 5 tonne per day processing. and we've validated ourselves that the sugars themselves are usable. They certainly have a highly fermentable characteristic and work well within a number of the conversion technologies that I spoke about earlier. And the engineering package that we've developed so far also has gone into that application. So the other elements that we've had to add into the validation for the application includes discussions with our offtakes that I mentioned earlier, and we're also talking with other conversion partners that are within the region. I'll talk about Gevo at the end of this presentation, but I'd like to just mention Genomatica, who are a leading technology company that converts sugars through to 1,4-butane-diol, which is otherwise known as BDO, as a direct replacement for petrochemical BDO. And their technology has been established and is commercial at this point in time. So they're a very exciting opportunity, particularly when looking in Malaysia. So the different groups that we've had support from in Malaysia includes the AIM Group, Agency Innovation Malaysia, who have provided substantial connections throughout all the different key groups, both funding and incentive groups within the Malaysian government. MIDA has supported us through a number of different incentives, including a tax incentive that was provided to us earlier this year. And as I said, we're working with a technology depository agency under the Ministry of Finance. And currently we have an application that's in review for funding. That's working through a process of audit and evaluation at this point in time. So we've got a structure now that sits, I think, that brings the Malaysian project into good focus. We've established a 51% Malaysian partner, which was required as part of the TDA funding requirements. That structure of that particular equity holder is that we can, without any dilution, essentially buy them back out at an appropriate time. So that doesn't change the economic position for LEAF of the project moving forward. We've now submitted the application with the TDA and await the further processing of that. That will give us a key validation point for the project in Malaysia. So that's a very important pivotal point for us coming up. We continue to work for additional points of de-risking with New Energy Risk, who are a technology insurer, and we see that they'll be an important aspect of folding that into the project as we get closer to a bankable feasibility next year and putting a wrap around it. So we've got a key set of milestones upcoming, which currently are unchanged. We've submitted the TDA application. With that being approved successfully, that would then go through into the funding commitment stage, which we would expect at some point next year. Then we can commence the finalisation to our bankable feasibility, getting to a financial investment decision and putting the wrap around it and getting construction underway post that. So with respect to LEAF as the company and business moving forward, we've worked very hard this year to minimise our overheads and get very focused with respect to our activities in Malaysia. And really progress the different funding milestones that I've just articulated to you. So we've got a very focused approach specifically on Project 1. We continue to look at investing our capital very shrewdly against those opportunities. And we'll continue to use a reasonably capital-light approach moving forward with respect to our funding requirements for the company. It really is, as I've said, focused on getting the Malaysian project validated and established with the TDA programs, and then continuing to support it. Followed on with our second line project that I'll now talk about, which is a local project. So to go back, we actually had a pre-feasibility study which was funded by the Queensland government, which started late last year, complete in this year. And the pre-feasibility study was to look at establishing a Glycell biorefinery in Queensland based around the sugarcane industry. The findings from that particular pre-feasibility were very positive in the sense that the availability of biomass was significantly larger than we were our first reviews had identified, and also that the price point for that biomass looks as if it will fit within the economics that's required. Previously, there'd been identification of bagasse, but we're now looking at both bagasse, tops and leaves as on a blended basis. To, again, identify the amount of biomass within the region, there's at least 12 million dry tonnes of cane-derived biomass available within that region, and much of it resides around specific port points which have got different established industrial components that could be useful for siting a refinery between the biomass and port. So the study encouraged us certainly to continue to progress that project. The shape of that we're working through now, looking at the definition, evaluating the different sites. We continue to work with the Queensland government in terms of their drivers, and their drivers are very strong. They've got a substantial funding program that's established called BioFutures, and we're hoping that there'll be additional funding that we'll be able to access with that. And finally, we've signed earlier this year a joint venture with Gevo. So Gevo are essentially a low-carbon fuel producer. They're a technology company based in Denver in the US, and their focus is essentially to bring about a low-carbon fuel replacement for jet A1. They've successfully run blended fuel with Virgin Pacific, and flown jets between Brisbane and LA for more than 2 million miles over a program of about 18 months. So they're a very valid partner that we've signed a joint development agreement with. We are looking at a number of different programs with Gevo, which does include the opportunity to look at an integrated facility for biomass through to jet using our technology in combination with theirs, against some of the other drivers that sit within the Queensland context. So with that, thank you very much.